Yo, what's up guys, Yuka here, welcome back to another video guys. Today I'm going to show you the trade recap of yesterday and how I made $498 day trade in the Nasdaq, and let's go straight to it and straight to the trade. So first of all, let's start with the daily bias for the day. What we had was a little bit of more complicated day than what I really wanted to be. So in 4 hours we don't have much, honestly. I didn't mark any 4 hour conferences on Nasdaq. On the 1 hour we have these 1 hour lows, we have Asian session lows, these 1 hour lows, these 1 hour lows, and these 1 hour lows down all the way down here. Not only that, we also have this bearish 1 hour SMT, which I can show you later, and then once market opens we have a shit ton of bearish SMTs formed. So for me, my bias was bearish, not only because of the bearish SMT, not only because of all the liquidity we have down here, but also because of the divergences we are making right on market open. I know this is a lot of things marked down, maybe I don't need all of them, so let's start cleaning it up really, because I don't think they matter at all, because they've already been this order block and breaker block pre-market, so it doesn't really matter. And yeah, let's go to now ES, and I believe on this day we actually created yeah, as you can see guys right here on the 1 hour, same exactly the same thing. We have these 1 hour highs, this bearish SMT getting formed, these 1 hour lows, and Asian this is New York session lows, but I was talking about these Asian session lows, this 1 hour low, these Asian session lows, and these 1 hour lows, and then these are lows. Again, just a low high time frame, low resistance liquidity that we probably want to sweep, plus the SMTs. And as you guys know, when I trade the SMTs, I'm always trading the lagging index, but today what was more beneficial was actually the leading one. And not only that, TGR, like I always trade the lagging index because it's how it is previously, but what I see nowadays and what TGR and all the students use is the leading index to trade. Why? Because sometimes the leading, because not normally, like recently, the leading SMT is just achieving all these take profits much earlier than the lagging one. And what happens, and what happened yesterday was before yesterday on Wednesday, we actually we swept out the draws on liquidity on the leading index and not on the lagging one. We created a bullish SMT out of that, and price moved higher. I can show you that because it was a trade that I took on ES. So as you can see, we have this lagging the leading index right here, and this was the trade that I took on Wednesday. Right here, as you can see, there is this bearish SMT. Let me show you. Let me show you again. Right here, bearish SMT. As you can see, these 5-minute highs were swept on ES and not on Nasdaq and not on ES. And as you guys can see, so if we were to trade this, because I did took a trade here on the 1 minute after we hit key level and everything, so I do believe my entry was exactly, it was we have a confirmation SMT, then we have a retracement into equilibrium, then we had a break of structure of that, enter on that, again break of structure, we also had reversal level gap, we also had 79% extension on the Fibonacci. No need to go through all of them. And then again, like if my take profit was 5-minute low, I think, I don't remember much, but 5-minute lows is take profit 1, so 1 to 2 risk reward ratio, and secondary profit will win on these 5-minute lows, which is 1 to 4 risk reward ratio. Price did not hit the secondary profit, and what did he create? And if you guys remember, I actually closed down my trade because I knew the SMT was formed. This is again the lagging index. It did not. What did he create? A bullish SMT. Why? Because the leading index actually swept the 5-minute lows and created a bullish SMT out of that. And so if one index already swept the draw on liquidity that you needed, it no longer needs to go through it again. And again, like this, pretty much the entry here would have been pretty much the same. So you got break of structure plus SMT, then you're looking for some kind of confluence. So you have not retracement into equilibrium. No, we don't have that. But what we have, you have the order block, it doesn't get it. We have breaker block, boom, gets filled. You get a break of structure out of that, boom, enter on that bitch, stops above these 1-minute highs, boom, take profit 1 on these 5-minute lows, boom, right here, and this take profit 2 on these 5-minute lows, which again were swept on ES, and they were not swept on Nasdaq. Why? Because this is lagging the leading index, so it will probably sweep out the liquidity quicker. And this is exactly what happened today. Again, like if you guys remember this trade, you can watch the Wednesday video that I saw this SMT formed. And all this liquidity, even though we had all this liquidity down here, boom, this was all SMT. So like as you can see, this was all bullish SMTs. So price did not want to sweep these anymore because it was already swept. So yeah, that's pretty much it. That was, as you guys can see, like the leading index actually went to the profits, and the lagging didn't, because it doesn't have as much strength. If you guys can understand that, and that's exactly what happened. So the leading index, as you guys can see, we hit full take profits at 320, and on NQ, what I thought we were doing is form a bullish SMT. So as you guys can see, 320 was all the way up here, yep, on this candle, up here, boom, and the Asian lows were down here. So we were, I don't know how many pips, but we were a long way off. So as you guys can see, I saw this 5-minute retracement up. For me, that's probably SMT getting formed, as you can see. So once I saw this, I just closed my position. I closed it all the way, I think, down here as I see it position. So again, shitty risk reward ratio, but I don't think I closed it that early. It was probably down here, I believe. Yeah, probably down here. That I closed once I saw that bearish SMT, that bullish SMT getting formed. Yeah, I think it was right here, yeah, with the time it checks out. Yeah, I saw that bullish SMT getting formed, and I just closed everything just because on yesterday, just because on Wednesday, I closed everything, and it did make sense to close everything, because on the leading index we had already swept that, so there was no reason for us to go lower. Because we had already swept that liquidity, but price wanted to sweep out this liquidity. Price also went close to these lows and almost swept them out, so there was more reason to go lower. But because of the bullish SMT getting formed, I actually got a little bit scared. So because my targets for the day were really these Asian session lows and these hourly lows that were relative close, and I also had these relative 1 hour equal lows. But for me, I was more bearish and to these lows, other than price continued to move lower, which it actually did. But again, not sad for the day. Of course, we could have got a banger trade, like again, boom, banger trade on to 5 risk reward ratio with the risk that I had, which was 250 times, even if it was times 4. It would have been a good result. But again, I traded out my rules. I saw bullish SMT getting formed, and this is why I'm changing from the leading index from the lagging index to the leading one, just because of it. And yeah, with that out of the way, let's go to the execution of the trade. And yeah, let's go through it. So market opens, and I think we created a bullish SMT right on market open with these 1 hour lows, I think. I'm not sure about that. I don't remember much. It was yesterday, but I'm pretty sure we did. Yep. Yeah, because we pushed the lower pre-market on these 1 hour lows, and we only pushed lower on Nasdaq afterwards. But it doesn't really matter, because I'm looking at Nasdaq, because we have this bearish SMT. So I'm going to 1 minute, and even though we've created this bullish SMT right on opening, for me it wasn't enough for just to change my bias, because we had all these bearish SMTs plus that hourly bearish SMT, and this is again all lagging index. So bearish SMT lagging, this bearish SMT lagging, 5 minute bearish SMT lagging, and 1 minute 5 minute bearish SMT lagging. And from then on, I'm looking for an entry. So price market opens, we sweep out this low resistance liquidity, boom, I'm looking for an entry here. What do we get? We don't actually get much. No, again, price moves lower, we don't get break of structure, we don't get inverse value gap, we don't get pretty much anything. I think we got 79 extensions of Fibonacci, but we do not get a continuation confluence. Then boom, price moves higher again, we get another bearish SMT, we have an inverse value gap. I'm waiting for continuation, or it might be fair value gap, parallel block, breaker block, whatever it is. I'm waiting for a confirmation. Equilibrium getting filled. I'm waiting for a confirmation. We do not get that continuation confluence. Price moves lower. I'm marking this fair value gap again. Seeing if it gets filled. It does not get filled. It gets invalidated. Boom. It goes up. Then it's trying to fill. I'm waiting for a break of structure down here or something. Reaction down so that we can go lower as a continuation, but we do not. Boom, we continue sweeping liquidity, and this is why you need to be patient, because some people might have entered on boom this kind of reaction. They all have been stopped. For me, kind of reaction for me is not enough. If it is a kind of reaction, it needs to respect at least 79% Fibonacci extension. Yeah, and that's something I actually learned with just experience on the markets. You learn this stuff, this kind of stuff. So yeah, with price moves higher, swept out even more liquidity, creates another bearish SMT, which I can show you, but you guys trust me, so no need. Bearish SMT, boom, break of structure off that, boom, price moves higher, what to feel, breaker block, this candle move down prior to the break of structure, order block, this move up, that caused the liquidity sweep, equilibrium, up to these highs, from to these lows. We create everything out of that. What do I enter on? I enter on this 1 minute break of structure down here, boom, on this candle, stop loss, above this 1 minute highs, price moves higher, scaring me, emotional, I'm joking, and then shit to that, and it's take profit 1, which is on the 1-to-1 risk to reward ratio. I did not take any partials here. I put my stop loss into break even, but I did not take any partials right here. If price and we almost got stopped at break even, but it's okay because price went down, move lower. It take profit 1, it's 5 minute lows. It take profit 2, these 1 hour lows, and then it created the bullish SMT. I think it was in this move, yep, on this move, and I closed everything right here, which is again why I should be trading the leading index, because on the leading index it was much more simple, and I can go through it again. So I can go through the entry again, like we created the Alice, bearish SMT, bearish SMT, bearish SMT, I mean, no minute, and I think I already showed it, or maybe not, I did not. So yeah, let's see if we get an entry. So we got SMT, so we already have confirmation. I'm looking for a continuation, break a block, or a block, parallel gap, something. We have parallel gap here, but it doesn't get filled. Boom. We have equilibrium. We can mark these highs up to these lows, but it doesn't get filled. Boom. So we delete that. We can delete also the parallel gap. Boom. Waiting, and I don't think we will have got a good entry right here, to be honest. So yeah, not even equilibrium got filled right here. So I don't think we'll have gotten. The only good entry that you could have had was this equilibrium getting filled, and then entry on break of structure of that, which was quite a reasonable entry. But I would not take any of those entries. But yeah, maybe I got lucky to trade the lagging index on this case, because I don't think I would have got an entry in the 1 minute. Let's see the 5 minute, because I know for sure that we have a 5 minute entry in one of these indexes yesterday. So let's go through it. So we got liquidity sweep. Yeah, we have nothing on ES, I think. Yep. We actually have. Okay, we actually have. So as you guys can see, we have. Let me delete this so it clears it up for you. But we do actually have a 5 minute entry on ES, which is the index we want to trade. So we got a 5 minute structure down here, boom, on this candle. Not only that, we have a bearish SMT formed again, second bearish SMT. So what we're feeling, price moves higher. What do we feel? We feel all block right here, boom. Sorry guys. We also feel break a block on 5 minutes. Right here we also feel equilibrium on this 5 minutes, and I was not seeing this, but it is quite clear. And we not feel 5 minute parallel gap, but we are feeling auto block, break a block, and not only that, we are creating another bearish SMT on 5 minutes. So for me that's enough. We entered on either break of structure, inverse parallel gap, or 79% extension of Fibonacci. Puta. Sorry guys. These lines, boom, 79% extension is on this candle right here, but we get actually break of structure before that. We get candle down and candle up, that's a low, break of structure on that, boom, enter the beach, enter B, stop loss where you think a trade is wrong, it will be on these highs. Let me see if it gives a good risk to reward ratio, so I'll have probably put on this 1 minute further gap on top of this candle. So yeah, much better risk to reward ratio, and boom, price completely shits the bed super quickly, and boom. This take profits 1 to 3 risk to reward ratio, and then you target those relative equal lows. Boom, 1 to 5.7 risk to reward ratio, much better trade. And this is why you should be trading the leading index, just because again I can check the time again. We hit full take profits at 3:24, and on NQ we want to sweep that time frame, those lows at yeah 5. So basically 2 hours almost later. And the potential of creating a bullish SMT out of that is just insane. So yeah, that's basically it. That's why I traded the lagging index, but I should be trading the leading one. And this is what I'm trading in my strategy. I should be trading the leading index instead of trading the lagging one. And again, I don't think in ES we had a 5 minute. Yeah, again we had a 5 minute entry on ES, and we also have on NQ a 5 minute entry, which I'll show you guys pretty quickly because the video is getting pretty fucking long, I think. And I'm sorry for that, but it is what it is. Yeah, we got we got a 5 minute parallel gap right here. This is a complete mess, but we have 5 minute parallel gap right here. I'm probably processing this video in 4K so that you guys can see better, because this is a complete mess if I put low quality. 5 minute parallel gap, we get retracement into 5 minute parallel gap, we need to see now a break of structure, inverse parallel gap, whatever it is. Fibonacci as well, boom, up to these highs, up to these lows. We do not break Fibonacci right here. Let's see, right here, for sure. We did that now here. Yep, we completely exploded the Fibonacci retracement. We entered on the beach, sell order, boom, stop loss above this 5-minute level gap, take profit 1 on this 5-minute highs already, on 5-minute lows 1 to 1, 1 to 1 with real ratio, take profit 2, 3, 4 on this low resistance liquidity, 1 to 3 with real ratio, and boom. Then of course the other take profits would have been right here, but again, you should be trading the lagging index, not the leading index, not the lagging one. So that's basically it for the video. Sorry if it was too big. I'll try to make it shorter next time, but again, just a lot of information today and a lot of useful information for you guys to learn on it. So yeah, thank you so much for all the support, and see you guys on the next one.